They've restructured a lot of their debt. So Fortescue now with the iron ore price rebounding over 50% since the lows we saw back in around September, I think, of $86 a tonne, now back up to around $135 a tonne. They'll be looking to restart this King's mine again, which is to add around 40 million tonnes per annum of iron ore, and that will go towards their aim of output of around 155 million tonnes per annum by the end of 2013. Now, Fortescue, of course, is very highly geared. It does hold a lot of debt. So when the iron ore price did fall significantly, it was a big concern for Fortescue, and that's why they did shelve these expansion plans. But with this rebounding the iron ore price, it is a much more positive picture for Fortescue. I think if the iron ore price can remain above the around $120 level, that's a big positive for Fortescue. Below that level, some concerns start to be raised around profitability and being able to sustain the debt level that they do have at the moment. But Fortescue, in essence, really is just a play on China. The correlation between Fortescue's share price and the Shanghai Composite is extremely close. I think I've brought up this chart once before, but if you bring up a one-year chart of Fortescue's share price overlaid with the Shanghai Composite, you can see the extremely close correlation between the two there. So if you're positive on China, if you're positive on a bounce in the Chinese market, a very easy way to play that would just to be buy into Fortescue's shares. But I think the Chinese data today will be closely watched as well. We'll see industrial profits year to date through to November are released. We saw back in October industrial profits turn positive again with a gain of 0.5%. So we'll probably look for a continuation of profitability in industrial profits in China.
Look, just on Fortescue, we know, as you made mention, their debt levels have been a concern previously. We know they got a new lending facility, and rolling over some of that shorter-term debt has certainly helped ease that. But still looking at potential sales, we've heard of stakes potentially in their port and rail as one way to go. 2013, would you expect it to be a better year? It's certainly been up and down, or is this going to be an ongoing problem? As you see, if we see a drop in terms of that iron ore price, as that graph shows you, Fortescue gets dragged down with it, and we could start to see some of those concerns flare again in terms of those debt levels.
Oh, absolutely. The iron ore price here is key. Fortescue, highly, obviously, 100% leverage to the iron ore price, and China is its big customer there. So that's going to be the driver for Fortescue in 2013. But I think probably 2013 should be a slightly more should be a more positive year for Fortescue. As you mentioned, they have restructured a lot of their debt. Though debt levels do remain sort of historically higher across all diversified miners at the moment, during 2012, really free cash flows took a tumble for miners, and they built up higher levels of debt. I think the average gearing across diversified miners increased from around 18% to 27% from 2010 through to the end of 2012. So Fortescue on the higher end of gearing, if looking across the miners, and that's why it is so highly leveraged to the changes in iron ore price. But I think a lot of analysts are expecting the iron ore price can hold above that $120 a tonne level through 2013. Some of the investment houses have a target of around $130 through 2013 for the iron ore price. So if it can stay at that level, then I think Fortescue will be looking at $5 fairly soon.
And look, staying in the space, or at least the resources gold miner Evolution Mining, commissioning a plant at its Mt Carlton mine.
That's right. It started commissioning the 800,000 tonne per annum processing plant at its Queensland Mt Carlton mine, which is a gold, silver and copper mine, and it's to produce around 25,000 to 30,000 ounces of gold through the fiscal year 2013. And Evolution Mining is one of those mid-tier gold miners and exploration companies, but it is quite well positioned within that mid-tier gold mining space. This Mt Carlton mine will boost its operating mines up to 5, and this mine has been key to its organic growth strategy in the past. This mine has around a 12-year lifespan, and it's actually the lowest cost of all of Evolution's mines. Now, one of the concerns for Evolution is it does have quite high cash costs in terms of production of gold. That makes it hugely leveraged towards the gold price. So to state the obvious, really you have to have a positive outlook on the gold price to be investing in a company like Evolution Mining. But the management at Evolution is good. It does have solid growth prospects. It has a significant exploration budget. It's got a strong balance sheet to fund that exploration and growth. Through 2013, I think it's budgeted for around $28 million in exploration costs. So Evolution Mining has been a good performer within the gold space, not so much over the past couple of months. Due to its leverage to the gold price, we have seen a pullback in the gold price during November and December. So Evolution Mining's share price has actually pulled back about 16% in line with gold prices over that period.
And look, Tim, you sort of posed a question that's been vexing markets, the outlook for the gold price. I mean, you go back a couple of months ago, particularly before QE4, indeed just before QE3, a lot of people talking about the gold price hitting 2,000, even going beyond because of the excess liquidity, the depression of the US dollar. Look, we haven't seen that. We've actually seen a little bit of softness in that gold price of late. It wears multiple hats depending on almost the time of day, if you like. Your thoughts on the gold price moving forward?
Look, there has been definite softness. It broke back below the 1,700 mark. When it did that, we've seen a bit of negative momentum in the gold price. It broke below the 200-day moving average, which is a key technical level for gold as well. Obviously, the US dollar is a big concern in terms of gold price. The US dollar has been kept very low through quantitative easing announced in the US. It probably will remain fairly low moving forward, which will be supportive of gold prices. But I think it was possibly Goldman Sachs put out an article a little while ago saying that they've expected sort of gold prices may well have peaked or are peaking at the moment, and we'll look for a slight reversal in gold prices moving forward over the next couple of years, because as the global economy improves and the US economy improves, we could actually see a modest improvement in the US dollar, which would be a negative for gold prices. But a lot of the ASX-listed gold miners have struggled over the past couple of months because of the negative moves in the gold price at the moment. Fundamentally, there's been a lot of talk about the gold price remaining strong for a long time, possibly hitting $2,000 an ounce at some stage. But at the moment, some significant weakness being seen.
Look, what about our session today? What are you watching? What are you looking out for? Do you expect much to, in fact, happen? Do you think people are just sort of still getting through their turkey and Christmas pudding?
Yeah, look, I think it will be a quiet day on the market. A lot of people obviously still on holidays. Volumes will be low again through today and tomorrow. We do have leads from the US. They were, obviously the market was open last night. The market did fall. Again, it's just going to be the market talking about the fiscal cliff negotiations, which are ongoing. There still hasn't been any further progress made as leaders come back to Washington now. But one positive, I suppose, overnight, commodities were mostly higher. We saw a good jump in the oil price, and base metal prices and precious metals were also slightly higher. Copper made some good gains of around 1.5% as well, which will be a positive for the market. But I think the market today will watch the Chinese industrial profit numbers that are released for the month of November. As mentioned, you did see profits turn positive again back in October with a rise of 0.5%. So I think a continuation of profitability should be expected there. In the US, retail sales across Christmas look to have been a bit disappointing. They have grown at the slowest pace since 2008. But on the positive side, we've seen a continuation in the housing market recovery in the US, with house prices gaining another 4.3% in the month of October. So that'll be a positive for consumers and consumer spending moving forward in the US, as the US housing data has been very impressive, particularly over the past quarter or so. And on the Australian market today, a quiet day, I think. We'll watch the energy space after that jump in oil prices. I think we can watch any US leveraged companies. Maybe James Hardie might be one to watch after that positive US housing data, and anything else leveraged to